What's up, guys? I hope you are having a profitable day. Now let's take a closer look at some key technical factors that made this long entry an attractive option for me. To start off with, we can clearly observe a low to high swing here, providing us with our range. I think that as you become more familiar with chart analysis, spotting trading ranges can be invaluable in terms of leveraging I think any potential gains without having to constantly deal with market volatility. So following the market's 40-point increase and this stop hunt expedition up here, prices begin to retract as supply slowly increases and then intensifies, especially after these inefficiency zones get stabilized. As you can see in the chart, the market regains its equilibrium after finding a new base of support above the 39.54 level, which corresponds to this imbalance area in a 5-minute time frame. It seems though that this reversal right here could serve as a key reference point for price recovery. So as the market starts to bounce back, I now have clearly my eyes firmly set on this particular price action area. And the reason for that is that when taking a look at these higher highs, strong bullish bars, and then this break in market structure, which confirms our temporary bottom. So when we take a look at these corrective patterns, if you will, against the supply side's dominance, they seem to point towards an upwards momentum that is gradually escalating. In other words, these key influences appear to promote a long entry. Even so, I'd like to say that I would commit to the trade only if prices pull back accordingly. And what I mean by that is that we know that sometimes such technical elements, including important ones, such as the formation of imbalance zones, which for those new to day trading are an introduction to potential future asset price volatility. So we know that such patterns may also lead to selling pressure even in underlying bullish markets. To reiterate, because I think this is important for noobs to grasp as a concept, a bullish market is still not exempted from selling pressure. What's more compelling is when imbalance zones, like is the case in this trade, are factored into the equation. And as you can see in the 1-minute time frame, there was a high probability that after peaking the price would have attempted, as it did, to pull back toward the middle of the range and into these main imbalance areas. And it did the balancing through, if you notice, through this slow choppy consolidation phase before puking lower. Also, notice how this imbalance zone becomes again a factor in this trade by acting as a resistance when prices try to go up. So my point here, guys, is that despite being a Ponzi scheme, the beauty of the market is that it leaves footprints, mostly in the form of inefficiencies. This obviously makes it easy for us to track high trade probabilities. The challenge, though, lies in traders' lack of discipline and knowledge when attempting to capitalize on these opportunities. So as I was saying, I would only have made this trade had there been a pullback. That's why my order was placed above the 39.58 level, which is in line with FIB's 50% retracement. I'd like to point out that an even better or more accurate entry would have been into this imbalance area. However, I chose not to risk missing out on an entry opportunity altogether. And by the way, guys, if you want more on imbalance zones, please check out this video here.
Stop filled.
Alright, guys, that should do it for this trade. Thanks for watching and hope to see you in the next one.